Hi, this is the introductory video for the chapter Not-for-Profit Organizations. This video covers the basics of not-for-profit organizations, such as definition, the management of not-for-profit organizations, the sources of funds, the books of accounts maintained by them, and the financial statements which are prepared by not-for-profit organizations. We'll start with the definition of not-for-profit organizations. They refer to organizations that provide service in the fields of education, healthcare, recreation, sports, art and culture, etc. Examples of not-for-profit organizations: clubs, charitable institutions, schools, religious organizations, hospitals, welfare societies, and societies for the promotion of art and culture. What is the motive or aim of not-for-profit organization? It is to provide service to society. Their aim is not to make any profit, and therefore these organizations do not carry on any trading activity. Management of not-for-profit organization is done by trustees. Trustees are accountable to the members of the not-for-profit organization and also to the society in general. Trustees have to ensure that the funds are utilized only for the objects for which the organization is formed. Sources of funds for such organizations could be in the form of donations, grants from government, legacies, life membership fees, income from investments, subscription from members, entrance fees, admission fees, etc. Treatment of surplus. Surplus is the excess of income over expenditure in the case of a not-for-profit organization. Such surplus is not distributed among the members. Instead, it is added to the capital fund. Next, let's take a look at the books of accounts which are maintained by the not-for-profit organization. First of all, why should books of accounts be maintained by the not-for-profit organization? 1. To ensure incomes are sufficient to meet the expenses. 2. To avoid fraud, misappropriation, etc. And 3. To ensure that the funds are utilized only for the objectives for which the NPO is formed. Next, let's take a look at the books of accounts that are maintained by NPOs. They maintain a cash book. They maintain a ledger showing accounts of all assets, liabilities, revenues, and expenses. They also maintain a stock register to keep a record of all consumables. As in the case of other organizations, not-for-profit organizations also have to prepare financial statements at the end of the accounting period. The financial statements of an NPO comprise of the receipts and payments account, the income and expenditure account, and finally the balance sheet. What is a receipts and payments account? It is a summary of cash and bank receipts and payments for an accounting period, shown under appropriate heads of accounts. Income and expenditure account is prepared to match revenue receipts with the revenue expenses in order to determine whether there is a surplus or deficit for the accounting period. The income and expenditure account is followed by the balance sheet, a statement that shows the assets and liabilities of the not-for-profit organization. So in this video, we learnt about the meaning of not-for-profit organizations, that they aim at providing service to society. But however, even these organizations should maintain books of accounts and prepare financial statements at the end of the accounting period. In the upcoming video, we will learn about the difference between capital items and revenue items. This will help us get a clear understanding about the difference between the receipts and payments account and the income and expenditure account, and help us prepare financial statements.